So this is fiscal issues in the times of COVID-19. So let me start, let me get into this. So I'm going to give a pretty high level talk, which will reflect our, as in the IMF's thinking about the pandemic and its impact, the kinds of global fiscal policy responses we've seen. I think this is one of the virtues of the IMF, is that we get to see what 189 member countries are doing that come from all walks of life, and what are the specific challenges that they're facing. And I think we, at this point, there are many more questions than there are answers, but maybe this presentation might be good food for thought. And of course, we are going to be coming out of this crisis, and even before we come out of this crisis, we're going to be seeing a situation where public debt is very high. I mean, the highest it's ever been in recorded history for both advanced economies and for emerging and developing economies. And so the question is, how do we, how do countries live with that, or how they actually bring down their debt levels? And lastly, about fiscal policy being used for sustaining the recovery, but not just sustaining the recovery, but also about structural transformation in terms of addressing issues on, also on the resilience front, sustainable front, which is on issues of climate, inequality, and bringing about a more kind of productive economy. So there, I think this is obviously a fantastic time to be a public finance economist, because this is the kind of issues that we're grappling with are squarely in your wheelhouse. So let me just give you a very quick outline of the pandemic and its impact. They tell you where we stand. So this is a snapshot of the pandemic in terms of the left two charts. You can see that. So if you look at the left graph, what you see is that we had, in the green line is for advanced economies, the number of new cases in advanced economies. You had the first wave that was in April and May, and that came down into July, but then after that, starting July, you had this again into August, and especially now, we're seeing second waves. For emerging markets, it's still the first wave that continues. And for low-income countries, you have climbing cases, but at least the counted, measured cases remain low. But there's still risks of things getting quite bad there too. So, everybody was concerned about possibilities of there being second waves. And that has played out. But if you look at the middle graph, you can see that the new deaths are nowhere near the peaks that we saw in the first wave. And even for emerging and developing economies, you see that the new deaths are not anywhere near what we had seen in the past. And this reflects a couple of things, which is that the numbers that we've seen in terms of cases going up reflects more testing, but also it reflects the fact that the demographics of the people being affected have shifted from the elderly to the young, who can deal with this this health crisis much better. But what has an outcome of this resurgence in the virus has meant, though, that the reopenings that we saw, and you see this on the right graph, if you see the measure of the stringency of containment policies, you can see that those lockdowns were coming off, starting around April into June, and then into July, but then afterwards they've stalled. And so the resurgence of the virus has basically, prevented us from going back to business as usual, and at a fairly early stage. And alongside what the graph also shows you is that a mobility that fell off at the start of the pandemic, that started improving in May and June, also has stalled. So I guess we would step back and think that I would say that the global economy hit a real trough in the especially in the second quarter, with unprecedented levels of contraction. From there, the economies are healing. You have started to see recoveries. However, it's not something that's going to be over very quickly. As long as this health crisis is still around us and we have these resurgence of viruses, of these cases, we are going to continue to have activity remain well below pre-COVID levels for a long time, for most countries in the world. So here is what you see, another interesting feature that you see about the kinds of recovery that we're seeing, which reflects the importance that this is a health crisis first and foremost. So again, if you should look at the left graph, so this is purchasing managers indices, which is kind of captures sentiment about future activity. You see that you see a steady improvement in those PMIs going into July and some into August. And you see more of those improvements for advanced economies as opposed to emerging and developing economies. But after that, you see some signs of stalling. So if you look at the middle graph, you have countries and their PMIs in August relative to what they were in July. For manufacturing, you see that many countries are above the 45-degree line, which is that the recoveries continued into August after July. But if you look at services, on the other hand, you see that more of the dots are below the 45-degree line, which is that you're seeing a stalling in the recovery. And again, that's a reflection of the fact that we still don't have a solution to this health problem. And in the absence of that, lockdowns or no lockdowns, there is going to be more voluntary restraint, more kind of self-distancing, and less engagement in contact-intensive activities. So again, just to summarize, we had a deep recession, unprecedented, in the second quarter for most countries in the world. We started seeing recoveries. However, now we're seeing signs of, there was an initial sharp rebound, as one would expect, but now we're seeing signs of stalling, and particularly when you look at services sectors. Okay, so now let's look at what the global fiscal response has been. So, I think you've heard this before. Fiscal responses have been on a scale that haven't been seen in the past. I think the lessons of the global financial crisis were learned. This is also a crisis that's different from previous ones in the sense that it was viewed as being completely exogenous. And so that brought about, there was less concerns about moral hazard and so on. And so you see a big increase in spending. So again, you have the graphs there on the left for advanced economies, in the middle for emerging markets and middle-income economies, and then on the right for low-income and developing countries. There is a fair amount of heterogeneity on how much countries did, but I want to point you to a couple of very salient pieces on that graph, which is circled. So if you look at, for instance, advanced economies, and you look at the amount that they have spent as in terms of a fraction of GDP in fiscal support, both using above the line measures and below the line measures like equity loans and guarantees, we're getting close to combined about 20%. On the other hand, if you look at middle income countries, that ratio, that emerging market and middle income countries, that is about, about 6% or so, or maybe 7%. And if you look at low-income countries, we're talking about 2% or so. So this is, the difference in the abilities of these, the different parts of the world in terms of using fiscal responses is just dramatic. I mean, you had the advanced part of the world that's had the fiscal space, been able to ramp up spending in a big way. While on the other hand, emerging markets and particularly low-income countries really have had their hands far more limited in how much they've been able to do. And this, of course, is going to affect the strength of the recovery in emerging market and low-income countries, and like in advanced economies where, thanks to the support, the recoveries are going to be faster. The second point that's interesting is if you look at by the way, for the global economy as a whole, the total amount of fiscal support has been, in terms of above the line support, has been over, not above the line, total support has been over $11 trillion, which is around 12% of global GDP. And again, most of that has been in advanced economies. A second interesting difference across these graphs is you see that in advanced economies, there was equal reliance on above the line and below the line measures. But then if you look at, for instance, low-income countries, then, there was mostly reliance on above the line measures, much lesser on equity loans and guarantees. And so there's a bit of a switch. Again, there's actually a fair amount of heterogeneity. There are exceptions to the rule. There are, for instance, if I look at emerging markets, India is quite the exception, which has relied much more on equity loans and guarantees as opposed to direct spending, kind of above the line spending. But this is, again, a very interesting difference that you see across countries in the world. And you can see fiscal support by type and beneficiary. Again, you have spending that's been done on, there's been health spending, there's been non-health spending, equity loans, guarantees, and quasi-fiscal activities, as you can see on the left graph. And again, there's, health spending has taken up only in terms of as a fraction of GDP, is a small number for many countries in the world. And most of it is non-health spending and revenues, as you can imagine. And again, you see the stark difference between low-income countries and emerging and middle-income countries versus advanced economies. In terms of the right graph, you see the distribution of fiscal support by beneficiaries. You can see again, there's been considerable support provided to households and to maintain employment, less so to SMEs and large firms, but still much more substantial than you would see for lower income countries. So because of this kind of support that was provided, especially the income support that was provided to households, we've actually seen fairly robust rebounds in countries like the US in terms of the recovery. Because if you look at retail spending, retail spending is now above what it was before this crisis and doing quite well. So this kind of income support really helped preserve livelihoods, as everybody argued for, and has helped with bringing about a somewhat faster recovery. However, what we are concerned about, and this is an issue that many countries are grappling with, is that while this income support has played a very important role, this crisis is not over. And, we still have lots of restrictions to mobility. There is still no health solutions, so people again are wary of contact-intensive activities. But this is now going on for a while. Now, you can see in the graph, it shows you the duration of income support measures that are in place and that have been announced by countries going into 2021. So that goes into March 2021 being the last date. And there are countries where the income support measures have been extended. So you see Germany, France, and Italy where it was extended, for instance, Japan. And there are countries where those support measures are going to fade out over the next few months, unless there are further policy packages put in place. And if you look right at the bottom where you have the emerging market economies, there's a very important difference there between China and as opposed to the others that you see there. In China, you still have a lot of support in the system. But if you look at the other countries, if you look at Indonesia and India, income support has already been phased out. In South Africa, it's expected to be phased out sometime soon, in October. So these support measures that were quite crucial to maintaining livelihoods and bringing back recovery are being phased out. And of course, in some countries, it's really not even an option because of the kinds of fiscal constraints they work under, while in other countries, of course, there are political issues. So this is, I think we're looking forward, one of the factors that matter obviously a lot, what kind of strength of recovery that we see is going to depend upon how countries respond to this. I mean, the argument is, of course, that if you have the fiscal space, you want to err on the side of being very cautious in withdrawing any kind of support at this point. And if you're a country, of course, that has limited access to financing, then it just means that the international community will have to play a bigger role in terms of concessional financing and concessional aid. Okay, so now that some of the questions that have come up, which I'm just going to list, and I'm going to talk through some of them, but these are questions that I think will be sources of big research questions going forward. In terms of what are the challenges in terms of fiscal policy going forward. So one of the big questions that we care about is how do we minimize the scarring, the so-called scarring, which is the reduction to potential output or potential growth in countries around the world from this crisis. So we're in the beginning of the crisis when this was going back to March, it was completely obvious what to do, which was to throw lifelines at everybody, at households, at firms, keep households and firms as much as possible, keep workers and firms as much as possible matched. So we have the short-time work schemes in Europe. Here you have the payment protection program, and to kind of keep them back so that you don't have a big loss of human capital or organizational capital. And then you help firms in other ways too, loan guarantees and so on. And that made complete sense when we were thinking about a few months of a crisis. But then as the crisis continues and as it's become quite clear that some sectors will not come back to the kind of strength, come back to where they were pre-COVID, and travel is an important one. When do you decide that this is now the time for workers to reallocate towards growing sectors, as opposed to artificially keeping them matched with firms that are in sectors that really don't have great prospects going forward? So that's one question. And of course, if you think that we're going to have there is a vaccine around the corner, which of course at this point, given the number of vaccines that are in trials and phase 3 trials, that there will, in all likelihood, be a vaccine. But there is the bigger question of how effective it will be, how much of the distribution, how quickly can you ramp up production and distribution of this in all different parts of the world. In discussions with many public health organizations, including the WHO, the general understanding is that for the acute phase of this health crisis to be over, one would have to wait until the end of 2022. And of course, it's going to vary a lot. There are going to be some advanced economies that get these vaccines much faster than emerging low-income countries do. But overall, globally, if you're thinking of an end to the acute phase of this crisis, it's going to take a couple of years. And so the question, of course, is for many governments around the world is now how to deal with the situation and how long to keep extending support. Similarly, there's a question of preventing mass bankruptcies versus having zombie firms. So if you look at bankruptcies around the world, while they've risen some, they have nowhere near the kinds of levels you saw during the global financial crisis. And again, that reflects the fact that there's been a lot of support provided, policy support provided to prevent bankruptcies. But again, as that comes off, we know through simulation exercises that we can have a very substantial increase in bankruptcy rates in many parts of the world. But then, of course, if you keep the support system in place, you also then have the risk of creating zombie firms that are around for much longer and prevent needed reallocation of resources. I think what's been quite different about this crisis in terms of the support measures that have worked is the support measures that have taken the form of either outright cash transfers, unemployment insurance, kind of cash transfers to firms effectively, or like the PPE program, conditional cash transfers in this case. Those have been quite effective The ones that have a harder time are that take the form of just increasing the debt overhang on firms. And so, countries around the world are just trying to figure out how to make their support to firms be more equity-like as opposed to debt-like. Second, another big major issue that we grapple with is on how to deal with how should fiscal policy play a role in countries where there are very large informal sectors, and many of our members have close to 80% of their population working in the informal sector, where there's no unemployment insurance, and of course in this particular case, direct cash transfers have played a role. They've been expanded where cash transfers already existed and it was being paid through the digital methods. The generosity and the scope have been expanded. But there are countries where it's very hard to reach the people and they've relied more on in-kind support. I think going forward, one of the legacies of this crisis is that people are going to figure out how to put in place more stronger social safety nets around the world and how to reach people much more quickly. Again, another question is how to balance between support and incentive to reallocate to other viable sectors, how to best support SMEs. And of course, the big question is also of emerging market and developing economies and low-income countries and how to deal with their constraints. So let me show you a left graph over here, which has the data for low-income countries in terms of what's happened with their expenditure changes and revenues. And you can see that there's a whole lot of dots in the bottom left quadrant, which is a case where they've lost revenues quite a bit. And along with that, they've had to cut back on expenditure. So this is a case where, the standard insurance mechanism doesn't work. They've had to, alongside cutting loss of revenues, they've had major losses in expenditures too at a time when these expenditures were needed. The IMF is working very closely with countries around the world to prevent a situation like this. We have about 75 countries for whom we're providing emergency financing to basically ensure that they're able to maintain at least their basic spending needs in terms of health spending and protecting the most vulnerable and low-income families. Again, and you see on the right graph, what you see is the debt services, the debt service to tax revenue, which the leftmost bars on that are about when that debt service to tax revenue is less than 20%, and the rightmost bars are when it's over 50%. And what you're basically seeing is over time, we've seen a shift where more countries have moved from lower debt service overhang to kind of higher levels of debt service overhang. So that leads me to my slide on public debt and living in the times of high public debt. So this is again the graph that shows you that if you look at government debt levels, well, this is now being projected to be the highest since, ever, and in fact higher than World War II levels if things continue the way they are going. And this is true again, both for advanced economies and emerging markets. Now, the question is how will countries, how will countries deal with these growing debt levels? How big a concern is it? And what would be the implications of this, for instance, for inflation? There's one set of countries for which we can see an orderly resolution of the high levels of debt. For one, we know that interest rates are expected to stay low for very long, and growth is going to rebound, which one would expect after falling to the abyss. And so that particular difference between the interest payments that they have to make versus the growth, that would help in terms of stabilizing debt levels in many countries, and also in terms of being able to continue to provide fiscal support without having to unwind too quickly. And you can see, and that's, this decline is the case both for advanced economies and emerging markets. I'm sorry, that's my dog that's decided to bark. But what you can see here I'm sorry, 1 second, please. So when you look at the right-hand graph, what you see is that central banks have played a very important role in purchasing government debt. You can see that, in terms of the purchases versus the central bank marketable securities or debt issued since February. We've seen very large purchases in the US, that's 57%, in Japan it's 75%. Even in several emerging markets, we've seen quantitative easing happening for the first time, and you've seen purchases of government debt by central banks. So as of now, we are still in an environment of low interest rates. We're seeing governments support the fiscal policy stance by buying government debt. This also supports their own mandate, obviously, firstly, of bringing back economic activity back to its full employment level and keeping inflation, bringing inflation back up to its target. However, there will be many countries for which this is no longer a channel that they can rely on. You have countries that will face very high interest rates, and growth levels will not compensate for it. Monetary policies that take the form of quantitative easing can generate unanchored inflation expectations. And so there will certainly be countries where they will need to have continuous access to international institution support in terms of greater liquidity support. But also we will have some low-income countries for whom the only solution will be a restructuring of their debt. And like I said, there are risks from high public debt. You could have a much more protracted economic downturn. You could have a tightening of financial conditions. Many of these countries rely on commodity exports. Commodity market volatility has been very high. Oil prices are nowhere near pre-COVID levels. And so this debt burden can grow for these countries. And again, like I said, many of these countries will need help from the international community. And let me just end with a last slide that on some of the other issues that are being put on the plate of fiscal policy. As we come out of this crisis, when we start having a durable recovery, there will still be space for countries, especially those who have fiscal space, to undertake public investment, because private investment is expected to stay low for a while, and interest rates are expected to stay low. So public investment can play a very important role. And in that case, it would be very important for countries to invest in green growth. We also know that growing those sectors tend to be also quite job intensive. And so it can help with that too. Again, going forward, this crisis is generating an increase in inequality. I mean, all past pandemics have done that too. This one will be no different, because we've seen low-skilled workers being more affected by this particular crisis as opposed to high-skilled workers. So we're seeing increases in inequality. Going forward, there's also going to be further a switch to automation, and that can prolong this increase in inequality. And we have to think about what the appropriate policies are to bring that down in terms of reskilling and so on. Fiscal policy also to encourage digitalization, in the sense that this is, I think, where the world is headed. And there are some countries where you do have the infrastructure for it, but there are others where you don't. And to ensure, again, that there is not some big divergence in prospects for countries, investing in digital infrastructure would be very beneficial for many other emerging and developing economies too. And again, just one last point on the on future strategies to bring down debt levels. So I said one was the fact that interest rates will stay low, so that helps. But there's also going to be a need in many countries for raising revenues. There will be countries where you would need more progressivity in the tax systems. They certainly need to accelerate the work being done on making sure that corporates pay their fair share, that the digital economy is not completely outside the tax net. And so these measures will be needed, and there will be countries where there's wasteful expenditures that will have to be cut back. But again, this crisis is going to leave major legacies for fiscal policy. And there will be some countries for which there will be more of a runway to deal with it, and there will be others for which there won't be. And so, I think this is a time also for institutions like the IMF, for us, where we're paying very close attention to all of our memberships and their needs, and making sure that we are well prepared to address any kind of turbulence that comes in the future. So with that, I'm going to stop